We specialise in protecting, preserving and growing your wealth. Blacktower Financial Management, the team you want by your side. Visit blacktowerfm.com.
So, Labour Day weekend done. We're back to it because this isn't France, right? And Christina Brady is back with us from Blacktower Financial Management. You took the yesterday off, obviously. You weren't allowed to work.
It was a red day.
That's right. Yeah, it's an odd thing that in Spain, you can't go in. They come raid your office if you're in working. Some places anyway.
They can do, yes. In Spain, some of the holidays do fascinate me, so I'm very puzzled by them.
Well, they come down to very local saints and the patron saint of the town, don't they? And all that's in the Virgin. Now, I remember you saying before, well, it was Easter, I think, when we last spoke to you, probably just before that. And then I suppose there have been not a lot done yesterday because it's Labour Day elsewhere as well. So how are we at with the markets? Fairly flat by the looks of things.
They're completely flat at the moment. The FTSE is still 7875. Sterling again flat 113.71. And we'll just have to wait and see what happens in the US. They're flat. Well, they were flat when they closed. So we'll have to wait and see. But yeah, all quiet at the moment. We tend to have May as more of a quiet month. There is sort of the saying, sell in May for the holidays and then come back in September. So sometimes we do see a selling off at the end of May, especially if markets have gained. So if markets have gained, what people tend to do is take out the first quarter profits if they want to, especially with traders and that they know they're going to go off on holiday. And then that's why we have less volatility usually during the summer.
I mean, it was creeping back up, the FTSE, right back up towards that 8,000 mark. Then it kind of stalled and it's dropped back a little bit. So we're at 7,884 I have in front of me at the moment. That's where we are. And you say not much movement over the last 24 hours or so.
Even oil at the moment is quite flat. Gold is flat. So people are just coming back. I think we'll have to wait and see what impact what's going on with the banks has on the markets. But I think most of that's been factored in. Also, we've got the reason they're subdued as well is we've got rate decisions in the next couple of weeks. We've got the Fed tomorrow, which is expected to raise rates by 0.25. We've got the ECB the day after, which is meant to be another 0.25. And then the Bank of England next week, which will follow suit. We've had Australia, which has already raised its rates 0.25% and has warned that more are needed. So all this talk about inflation being under control, everything like that, I think is a load of rubbish at the moment. Inflation, if you look at basic food inflation, is still 20-30%. It's not coming down. So we are going to see more rate rises. I've said that, I think, throughout this year. It just depends how inflation reacts to that and wage growth as well, because, wages, pensions are not keeping up with inflation. People can't make ends meet. People are a lot worse off. Disposable income across the UK and Europe has just fallen dramatically due to bills going up, inflation, etc.
Yeah, I did see that
we are going to get more rate rises.
There was some wage growth, wasn't there? It beat expectations, and I think I heard yesterday it works out about 2.5% loss over the last year or so. So you're still down because of the inflation rate.
You are still down.
Yeah.
Pensions are still down, even though we've got state pensions which have risen. We can talk about that in a little while, how much they've risen by. Still not in line with inflation. So we'll just have to wait and see. But anyone who thinks rate rises are over is mistaken. Obviously this is going to impact anyone who has any types of loans, credit card debt or mortgages. I know some people here have seen their mortgages double. Some of them go up more than double. One lady, hers has tripled since last year. If you weren't on a fixed rate mortgage, which I did warn everyone about 2 years ago to start looking at fixed rate mortgages, then you have a problem. If you have a mortgage that is fixed rate and it's coming up to be renewed, you're in for a big shock because your mortgage payments could have doubled, if not tripled. Most of the UK banks have removed their fixed rate mortgage deals at the moment till they wait to see what happens with the Bank of England next week. So it is a hard time for people, especially if you have got debt and you're having to pay interest on it.
So you'll have people that have Spanish mortgages as well, I presume, that are tied to the Euribor, which is, where's that at? Do we know?
It was 3.25%, I think, last time I looked, which obviously is a lot more than it used to be at zero. And if they do another 0.5 or 0.25, that's even more. So I think people, if you have got mortgages, it is a hard time. You are going to have to cut back even further. And I think this is here not just for this year. I think high interest rates will carry on throughout next year. Hopefully then inflation will start to cool off and we will see them steady. Hopefully starting to go back down towards the end of 24, maybe into 25. We'll have to wait and see. The US economy, if you look at it, is technically in recession, although most governments at the moment are trying to avoid officially being in recession. That includes the UK, Europe, US. So times are hard.
Yeah, that little 0.25%, it's their kind of default rate, isn't it? So we're putting it up, but not by much. It doesn't sound like a lot when it's only 0.25%, but it can make all the difference, as you've just said, with people with mortgages and the like.
It can, because banks usually put their mortgage rates up by more than the 0.25%.
Yeah, it's a base rate, isn't it?
Yeah, and they don't, see, because usually your mortgage is so much above base. Also, they don't pass any of those rate rises usually on to savers. So if you've got your money in the bank, obviously it's nowhere near keeping up with inflation. Most people are still earning nothing or near to nothing. So it's a very, very hard time for some people.
You mentioned, I think we've touched on this before, about the Australia, if they're putting up rates or whatever. The Australian economy, it's something, it's a bit of a mystery. Obviously, just basically for geographical reasons. What do they do? I mean, are the links with China, with Australia?
China, yes. Australia obviously exports lots of minerals to China. But they also export to the rest of the world. And Australia is having a hard time. House prices in some areas have crashed. You've got inflation running riot. You've got interest rates going up. The economy is struggling desperately because Australia was quite draconian, more than the rest of us, over COVID. So they're going to suffer even more than any of us. You saw what happened when China closed down. So, yeah, Australia is suffering. And we tend to ignore it because it is over the other side of the world. But they've obviously increased their interest rates, which is a good indicator of what's going to happen to the rest of us.
Sure. And I don't know if you mentioned the exchange rates there, but no real movement there. We're still at 1.1370 euro to sterling and US dollar to the pound and sterling to a euro, pretty much the same.
They are. Everything, as I said, is remarkably flat. We will have to see what happens as the week goes on. Yeah,
I've learned from when we speak to Kevin here that they anticipate well in advance what's going to happen with the currency markets. They know it's maybe going to go up. The central bank or Bank of England perhaps are going to put the rates up, and it's factored in well in advance. They're way ahead with it. So they know.
Oh, gosh, yeah, even the markets factor in. The markets have already factored in a 0.25 rate rise across the Western world. The only thing that will affect the markets if the rate rises any higher, obviously, because then it sort of gives you the impression that things are worse than we expected. So if we get a rate rise of 0.5 instead of 0.25, then that will impact the markets. And obviously then we'll see the exchange rate. It depends who ups their rate the most, but usually they try and keep it in line. It's like a little cartel. We won't raise it more than you.
Right.
We don't want to look like we're even worse than you are. So actually, if you look at it, April was the least volatile month for the markets since the pandemic. Most of that is because they didn't want to do anything until they know what's happening with rate rises, and also there's all speculation on the banks.
Yes, okay, and there's more on that in just a moment here because another bank's come into play. Which one was in the news? First Republic, right? I don't know.
It is First Republic.
First Republic, but the name, it sounds like a very grand and a big bank. Is it?
It is. It's the 14th largest bank in America, and for the last couple of months there has been rumours it's in trouble. Well, everyone's known it's been in trouble, and it appears that JP Morgan was invited by the US government to take it over, which obviously it has done, and it was to squash concerns of a major bank collapse. But it is a blow to confidence in banking across the world. So JP Morgan have paid $8.5 billion to buy First Republic, which is the 14th largest bank, and they've taken it over. So what they're going to do is obviously it will merge in. I have to say, though, that this sort of thing has happened since the beginning of time. I know when I worked in the city many years ago, banks were bought out all the time when they got in trouble, but it never made the press. press. They managed to keep it quiet in those days, whereas things are a lot more open nowadays with the internet, etc. So you find out things. And you've got Morgan Stanley, which is another big bank, which plans to cut another 3,000 jobs, which will be the second reduction in 6 months. However, talking about that, we've got HSBC, which profits have soared to 12.9 billion. It bought the UK arm of SVB Bank when that went bust for £1 and made 1.2 billion straight away. So obviously I would have bought a bank for £1 if I could have made 1.2 billion, but I wasn't offered it. And NatWest profits have surged due to its rise in lending and the rates it's charging on mortgages and loans. So most of the banks, their profits are going up at the moment, but most of it is based on debt. So it's based on people's debt. They're having to pay more interest. Therefore, the bank's profits have risen. We saw MasterCard. Obviously, profits went up because more people were having to use credit cards to sustain them through this time. So, yeah, it's slightly worrying that another bank technically has collapsed. And what people have to remember is bank deposits are guaranteed if they're in a current account or a deposit account. In the UK, it's 85,000 per person per banking group. In Europe, it's 100,000. In the US, that's euros, and in the US, it's $250,000. If you have more than that in a bank, and it does collapse, you will lose the rest. So if you have a joint account in a UK bank and it's got more than 170,000 in and it goes bust, say you've got 400,000, you will lose everything above the 170,000. In the Europe, if you've got 200,000 in a bank, say jointly, or 100,000 on your own, and that bank goes bust, you lose your money. And the more the money is guaranteed, in some cases it's not paid back straight away. If you look at what happened in Greece, it took years for people to get their money back. So what I'm saying to people is it is a time of instability within the banking industry. You've got mortgage rates going up, so you're going to have defaults or mortgages rising. It depends how much mortgage debt a bank has got on its books as to whether it can service it or not. So please be very, very careful about what you hold in the banks and make sure, if you can, that you stick within those deposit limits. And remember, it's per banking group, not per bank. So in the UK, we have, like NatWest, Royal Bank of Scotland, same banking group. So you've only got 85,000 between them. Lloyds, Halifax, same banking group. So only 85 between them, not 85 each one.
Sure. Now,
people need to remember that.
Are people with that sort of cash, are they leaving it in the bank these days? Because, I mean, your first thing, the things we say every time is that it's not, you're losing money over time with inflation. Are they holding that much just as a current account, or should they be investing?
I think some people, especially if they've sold property and they're not sure what they're going to do, are holding that in a bank. And some people come and see me and I say to them, well, go and open a bank account at another bank and at least split your risk. And I think people have been worried about market volatility. And rightly so. If you are going into the markets, you do need to go in for the long term, not short term. But there are actually some different products out there. And I know Blacktower has got a few at the moment where they're 100% capital guaranteed. And we've got one which is guaranteed by the FCSC in the UK. So that comes under the UK banking guarantee of 85,000 per person. And that really is one that it runs out at the end of this week, but there will be another one. That's in sterling. We're hoping to get one in euros. And what it is, it's taking a bet on the FTSE. So what they're saying is if the FTSE doesn't go up by more than 20% or down by more than 20% on one day, so I think it's the 12th of May for the next 5 years, we will pay you a 7% coupon. And if you look back over the last 5 years, there's very few days when the FTSE has been up more than 20% or down by 20% on that in that 5-year period. So it's a good bet. However, that does, if you want to make an investment, that does run out at the end of this week. So it's quite a short time for people to do it. Also, we have fixed term deposits. We have a life assurance company called Nighthead, which is out of Cayman Islands, and they're offering a 3-year fixed deposit for sterling, paying 4.9%, and in euros 3.8%, which is very, very good when you consider what the banks are paying you at the moment. And they're capital guaranteed. So people now have got options. But I would just say to people, please just be very, very wary about what you do hold in your bank accounts. Because I'm sure people who had First Republic or SVB in the United States never ever thought that those banks could go under. You're never too big to fail. And I think that's what people are saying about JP Morgan as well now. We always had Lehman Brothers. It's too big to ever fail, but it did. So we have to be, look at Barings, look at various other banks. So please, don't bury your head in the sand. Try and make your money as safe as possible.
Sure. So, I mean, you could put it in different banking groups, or there are other options, as you just described.
There are, yes.
Okay. It's National Life Insurance Day today. I don't
Is
know,
it?
Yeah, I don't know what I need you to do with that information, but I just thought I'd pass it on anyway.
Do they make these up? Because every day seems to be a different day. It's like Love Chips Day or Cuddle Your Dog Day.
Oh, it's National Truffle Day as well. I've got the whole list in front of me, and Dougie Mack will go through the whole lot as well. World Asthma Day as well. Some of them are good for raising awareness and the like. But
yes, some of them are, but some of them are just so silly.
There are some daft ones. Take a baby to lunch day today too.
If you look at when pensions were started, I think life expectancy was early 50s, and yet you didn't get your pension until you were 60. So therefore, many people weren't getting a state pension. What we've seen is an increase in life expectancy, although that's fallen significantly over the last few years. So people are still living to their 70s, 80s. So they're saying if you're going to put that into perspective about when state pensions started, people shouldn't be getting their pensions till they're in their late 70s, early 80s. Well, that is ridiculous, because most of us know that once you get in your 60s, you can't work anymore. And if you've got a manual job, a very heavy labour, you make sure you can't do that in your 50s. So we do need to have some perspective there. I think 60, 65, I think, is a good retirement age. But as we know, most of the Western governments are trying to raise that to 70 at the moment. And I wouldn't be surprised, even if you do pay into state pension all your life, in 10, 20 years' time, it will be means tested. So if you have other forms of income, you may not get the full state pension, even if you've paid into it, because they won't be able to afford it. So it will only go to those in desperate need.
Then there would be unrest.
Sorry.
Then there would be unrest. I mean, it's how people say, oh, by the time I get to retire, there won't be a state pension, but they couldn't just whip it away like that because there are people paying in, for the last 20, 30 years. No, but they could
raise the age so that literally you won't be getting a state pension. Right. They can do things like that. And even if you look at state pensions, UK state pensions, they get a rise from 10.1% from next Monday, but it's still outstripped by inflation. Inflation has been higher than that 10.1%. And at the moment, 2023 looks like it's going to be one of the worst years to start taking retirement from your private pensions. This is due to a combination of factors: inflation, stock market performance in 2022. That wiped thousands and thousands off the value of the pension pots. So the best idea, if you were thinking of retiring, if you can, and you've got relying on private pensions or defined contribution pensions from your employer, which is subject to being affected by market volatility, maybe, I know it sounds difficult, but put off your retiring for a few years, allow the markets to recover, inflation to hopefully stabilise and come down, and then your pension pot will go further. All the effects that have happened now mean that you need, nearly 100,000 more than you did a few years ago to get the same sort of income in your retirement. So please be very, very careful. Obviously, state pensions have gone up, so the full flat rate goes up to £203.85 per week, so that's $10,600 per annum if you retired after 2016. And before that, it varies on whether you had different types of pensions, but most people should be getting $10,000 a year. But I was reading an article now that said if you want to have a comfortable retirement in the UK, you really need to be getting, a single person, well over $20,000, $24,000 a year. Yeah. So the state pension, if you're relying on that alone and you haven't got any other provisions, you are in poverty. There is no way you can do that. If you think how much the council tax costs in the UK, how much your energy bills are, as I said, food inflation, 30%. It is a very, very dire time for people who are relying on state pensions alone. Yeah. And I think, youngsters nowadays, I know it's a very, very difficult subject to broach, but they need to start to be saving for their old age if they want not to be working till they're in their 70s or 80s. Getting a job at B&Q or on the tills at Sainsbury's. You need to start pushing away money now. I'm not saying to place it into a pension. I'm saying you could put it into an investment plan, because what they're doing as well is they're raising the age that you can get pensions. It used to be 50, then it was 55, and now they're raising it to 58. So if you are a youngster and you want to retire, say you're in your 20s or 30s, when you come to retire, the age you can get your pensions, be it state pensions, be it private pensions, for private pensions, etc., it could be 60 or 65. State pensions could be 70. So if you want to retire before then, you need to start thinking about putting away some money now. It doesn't have to be a great deal of money, but if you put it in an investment plan, you can either just put it in a tracker on the FTSE or the S&P or a combination, or you can put it in an active managed investment and just try not to touch it at all. If you put it on a platform, it's low cost. Even at Blacktower, we have platforms that are low cost. You can drip feed money in, and you can buy up stuff. And hopefully, by the time you come to retire, you'll have a nice little nest egg which can cushion you till other pensions kick in, like work pensions or state pensions, especially if you are planning on retiring before you're 65, 70.
Yeah, good way of doing it. And is it a thing where you don't have to pay in a set amount each month, so it doesn't have to be a huge amount? No,
it's fully flexible. You can pay in whatever you want.
When you've got it, you can pay it in.
Yes. Okay. Or some people like to know that they've got to put a set amount in each month. It's entirely up to you. They can be as flexible as you want them to. And I'm not being funny. A few years ago, if someone said to me, I want to set up a regular savings plan, I would have said, no, don't, because the costs outweighed the benefits, especially for the first few years. Most of the first few years, contributions were taken up in costs. Nowadays, we have platforms that are low cost. You can put your money in. It's not going to eat away at things so much, and it is worth doing. So if you are out there and you fancy doing it, or if you think you're going to take a risk and buy some shares, you've got oil companies. I'm not going to say they're always going to be a good bet, but if you look at BP, their profits have gone up by more than £500 million, more than expected, and this is due to continued benefits from elevated energy prices. Now, I'm sorry, it's been going on for so long now. Governments are weak. They do not want to crack down on this because most of them have shares in energy companies. We talk about ethical investing, but the people who are lecturing us on being ethical are the ones who are investing in unethical things. Most of them have mining companies. Most of them have oil companies. Some of them have arms companies, tobacco companies. They're not thinking ethically. They're thinking about how to make their money grow. And I think that's something when people come to see me, I do say to them, do you want us to take into consideration environmental, social, these sort of things? And people say yes, as long as it doesn't affect the overall return on my investment. And sadly, you have to say, if you're going to go 100% that way, you're not going to make much on your investments. You just have to look at what the major players in the markets are invested in. But you've got to think of yourself where money's concerned. You've got to look after your own money. You've got to think of what you want and what you need. And by talking to a financial advisor, hopefully we can formulate a plan that gives you the potential to do what you want and for your money to work for you. Obviously, we couldn't have foreseen COVID and the lockdown in the markets for nearly 2 years. We did understand the effect that would have on the market. Some people thought there'd be a quick recovery. Most of us knew it was going to be a rocky ride once inflation hit in. But I think what COVID has taught countries is that you shouldn't be so reliant on one nation for all your goods. So hopefully that will bring certain manufacturing back to certain countries and people will become more, independent.
Oh, well, there's a few options there and plenty to talk about. So with pensions and the like, and anyone that needs to get in touch, you can get in touch with you fairly easily.
Yes, you can. You can email info@blacktowerfm, that stands for financialmanagement.com. You can always go onto our website, which is blacktowerfm.com. If you go to locations, you can find myself under the Costa Blanca or France. You can always just call the office. If we're not there, please leave a message. We will get back to you. Sometimes we're in meetings or we're on the other line, but we will get back to you. If we don't get back to you, we did have a problem with one of our emails, the info one the other day. And so for one day we weren't receiving emails, but people just emailed again and we got back to them straight away. If you don't hear from us, please get in contact because we usually try and get back to you within 24 hours, if not 48 hours, obviously if it's over a weekend. But we are here to just help you, give you advice. And if you have any questions regarding finance, please don't be afraid to ask them. Nothing is too silly. Okay, if you need help with anything, pensions, investments, we are here to help you and give you guidance. Some people we do a review and they don't need to do anything. Other people need little tweaks. Other people need major tweaks. But that's what we're here to do, is to help you and put your mind at rest if we can.
Okay, actually, you reminded me, without restarting things again, now we've wrapped up, but about when you get your state pension, say the UK one, can you work after that? Are you allowed to?
Yes, you are.
Okay,
yes.
I know that's a dopey, naive question, but I wasn't sure whether you need to do cash
No,
jobs so it doesn't
Spain,
show up.
you can't.
No, right.
But well, it depends. If you get the full state pension in Spain, you can't. In the UK, yes, you can carry on working. And if you look at the moment, the state pension, as it rises, it actually eats into your personal allowance. So if you have, if you are working, you have to be careful, because these state pension rises mean you get, 12,000. I think it's, hang on. At the moment, the allowance in the UK is 12,570, and with the current state pension raises, if you get 10,600 a year, it's using up 84%.
Wow.
So, you haven't got that much more before you start paying tax at 20%. That's another thing to consider. Does it take you into a higher tax bracket if you work? And does it make sense to work? You've got to work things out before you just jump in there. But no, you can work while you're receiving a state pension. Yeah. 100% definite.
Because you do see the old boys doing a bit of gardening and handyman work, don't you? Even though they're
why
retired.
Not?
Yeah, quite, absolutely.
Keep your hand in, or some people don't want to give up altogether. It would kill them off. So if you want to do that, yes, by all means do.
Yeah, there's a guy on the news yesterday who's doing an online business because he said, I just used to work, sort of 12 hours a day or whatever, and I'd come back to doing nothing. I can't do it. Can't just do nothing. Yeah. So there are things you can do, especially if you're willing to embrace technology, perhaps. All right, thanks ever so much.
And also it keeps your brain active.
Yeah, no, definitely. Yeah. If you can keep doing something. You can't just retire and do nothing. It doesn't work. People find out, even though the sort of bits are very nice sometimes. Okay, well, we'll speak to you in a fortnight's time. Thanks ever so much.
Yes, thank you for having me.
Listening and exceeding expectations for over 31 years. Blacktower Financial Management, the team you want by your side. Visit blacktowerfm.com.